Hello, Maverick traders. Welcome back to your currency recap for April 3rd. Corey here with you. Always nice to see you. So we're going to take a look at broad markets, what meaningful news is out there, whether the news is being digested as good or bad or indifferent. We're going to talk about commodities. We're going to talk about Forex and crypto plays. And always, we're going to highlight our very best ideas and setups as they materialize. In some cases, we can even see and kind of calculate, okay, this is a cup and handle, here's the buy zone, and so forth. So we're going to highlight those as best we can.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we look at markets today, Monday, remember, we did the currency recap and we talked about how the better than expected data, the markets actually sold off on that because the takeaway is if the data is too strong, the Fed is not going to cut rates and the markets had to start repricing for fewer rate cuts and for interest rates to stay elevated. Well, today we had a little bit of a mixed bag. ADP employment beat expectations, ISM services missed expectations, and the markets were up slightly. But it is worth noting that if the data comes in much stronger than expected, like imagine on Friday the jobs number is really strong, the markets may actually take that as very bad news due to the off play of, well, the Fed is not going to cut rates and be as accommodative, and so especially the US dollar, that stronger than expected data means the dollar might really jump higher because again, we're still pricing in and the market's still coming to the realization that they're not going to get as many Fed rate cuts this year as had been planned by Wall Street. Now, as we look at price action, US dollar and Japanese yen a little bit weaker today, Aussie and Kiwi a little bit on the stronger side. If we look at the rest of markets, crypto got hit hard. Oil and gold continue to just march their way upward. It's nothing too volatile. It's just every day we seemingly go a little bit higher and a little bit higher. This commodity play is very much intact. And if you break down crypto, I've maybe not called it right in that I've said I'd much rather be in Bitcoin than Bitcoin Cash. And Bitcoin Cash really spiked a couple of weeks ago, but today's a prime example where Bitcoin was slightly higher and Bitcoin Cash got annihilated, down 10.2%. So if you're in the crypto space, if you trade crypto, I still feel like the Bitcoin trade is the more safe and secure trade. It has lower levels of volatility and it's still upward trending long term, which some of these others didn't experience as much upside as Bitcoin certainly in the past few months. Now, if we look at the markets, we've pulled back to the 20-period moving average, but the trend is still intact. So the next few days become pretty interesting. I mentioned this on Monday that one thing that had been happening is each of these pivot lows, they were all higher than the one before, and we needed to break that string of higher lows in order for us to even have any concern about the market. And we highlighted this prior swing low as the level. Well, notice what's happened here in the last day or so. We've pushed down to and slightly kind of wick through that prior low. So, is it a big breakdown? No, but we've seen the first little pocket of weakness. This is the first real signal that we've even rolled over for a corrective phase, not even a downtrend, just a correction. This is the first one in months. So notice how each of these higher lows were intact. This week we've broken that. So you'd at least have to say, okay, the markets are weaker than they've been in weeks, in months. That's worth noting. I would not be surprised if we stall out here and then see another little sell-off and another little push to the downside. That's frankly exactly what I would anticipate would occur. Even if you follow Elliott wave theory, you'd anticipate this to kind of move in an ABC type of formation. So I'm fully expecting a little bit more give back in equities. Now, if we look at what's on the calendar, so tomorrow we get some CPI data in the Swiss franc is impacted by that. If you're watching the Swiss National Bank, it can be a little bit like watching the Bank of Japan. Usually not a huge move, usually not a lot of volatility, but something to be aware of there. At Friday is really the next thing that's worth focusing on. Employment data out of Canada and the US. And like I said, this is the bigger employment number, much more widely followed, much more market moving than ADP employment, which came out today. All that really does is gives a little bit of insight into what's coming. But we get average hourly earnings, we get a new unemployment rate, we get a lot of different things in that Friday number. So pay attention to that one as a catalyst for movement. So if we break down our velocity score, here's how I really have it set up. CAD and Aussie are the newcomers to the upward trends. On the downside, it continues to be Kiwi and Swiss franc. And crypto in general, just a little bit weaker of late. Certainly lagging gold, commodities, oil, some of these things that have been working well. If we jump over to some live charts, here you can see a chart of the US dollar, which has pulled back now, and you can see this level from the past. Kind of a head and shoulders toppy type of pattern. We broke that. It acted as some resistance, and notice we've come back to it. So will we hold here? Will we bounce? Again, non-farm payrolls on Friday are going to dictate that overall trend and the direction we leave. If you look at some of these others, like we said, Swiss franc and New Zealand dollar continue to be the most compelling and violent downward trends that we can see. If you're looking for new signs of life, certainly the Canadian dollar we've talked about and the Australian dollar. These are the things that of late you want to be buying the dips on. You want to be looking for that type of dynamic, and the Aussie just had one, right? We pulled back for a week or so. Nice reversal and starting back up. CAD in a little bit of a pullback, but you got to consider this as a potential buy candidate on those dips. Like we said in crypto, Bitcoin is kind of in this consolidative pattern. We haven't broken out, but we haven't broken down. Whereas if you look at some of the others, I mean, Bitcoin Cash, like we talked about, had this enormous run. Ethereum still in a little bit more of a downward trend. Litecoin kind of consolidating up near the highs. Bitcoin and Ethereum, certainly Ethereum has been the laggard, has been the big time underperformer. Bitcoin is more of the safety trade. It's like trading the S&P 500, whereas going into something like Litecoin would be like trading Tesla or something much more volatile. If you're looking at currencies, again, a comparison would be that Litecoin would be like the New Zealand dollar. It's just a little bit less activity, less volume, less liquidity from the standpoint of more people trading it, whereas Bitcoin would be like the US dollar. It's very strong, stable, doesn't move as much, not nearly as volatile. So pay attention to those trends. Certainly Bitcoin in this consolidative pattern, the way I would draw it up is you got to watch this little ascending triangle. If we start to break these levels to the downside, crypto in general is in a lot of trouble. If we can come back up towards the highs and break out of the triangle that way, well, everything marches on. And at that point, on a new breakout, it might be the Litecoins of the world that accelerate the most, to give you the most bang for your buck. So there's a time and a place. Right now, crypto's on some shaky ground. If you're going to be long, Bitcoin's a little bit safer place to do it. Nothing looks too great right here. We're going to trade a little bit less, really pick our spots, continue to utilize relative strength, relative weakness, and I hope you enjoyed this currency recap. Everyone have a great rest of your week, and we'll see you next time. Goodbye, everyone.